The moment you realize this in trading, your psychology will be better. When it comes to psychology in trading, there's only fear and greed. That's why they only use the fear and greed index. You don't see fear, joyful, I don't know, all the other emotions that you can add in there. But it's only fear and greed. That's the only two prime drivers when it comes to psychology when trading. So let me share this little story that I know that me and you have gone through so you can better understand. But before I do that, follow me because I drop gems every day. They're even trying to impersonate me. So let me go with the story of fear. How me and you have experienced fear in the market. So in the market, you probably learn a strategy and you deploy that strategy numerous times, and there was a moment where you was winning, then there's a period where you're losing. That period where you was losing, right? This is where I say the market has cycles, because when you're winning, maybe your strategy was going up, break a structure, fair value gap, take it, you go up, right? Market's going up anyway, so it's working then. But when it turns and it's coming down, that story there is different to the first story, because now when we make a new high internally, that is liquidity, that is bait. Every new high we make internally is bait until we get to the causation that caused that higher move or that bearish move. Do you get what I'm saying? But remember, in market cycles, when we're coming down, every higher high, every internal higher high becomes liquidity. So you're still going to see in the bear market price going to break structure, taking something before we go there. Like let's say we sweep liquidity and we went there. When we're coming back down to mitigate, that mitigation is not real because we're in a bear market. So that demand is weak. It's just to take us to the extremes of that bear leg that we had, the bearish leg that we had. So what happens is you end up taking trades in that section. Me and you, we take trades in that section there and we lose. Our strategy does not work, right? Because we're seeing everything, all our confidence is not working. However, now it's tapped into our point where we know it's going to work, but now you're doubtful. My brothers and sisters, this is what I call fearful. Everything matches. You have the right point, the right zone, the right protocols in terms of lower time frame confirmations. However, you feel fearful to take the trade because you've lost so many times. And if you look to the left, for example, something like this, if you look to the left, we're still bearish. So you're going to see, if I play this out right now, look, you're going to see a change of state of delivery. So you're scared, right? We take it out. Obviously, this point is not the real one. This is the real one. Then what do? We start going. In fact, that isn't even a real one at all, but I just took it because I had my key window. The real one happened. Let me just X this quickly so you can see it. The real one happened here, and that's where we're going. But look, if you look here, these never touched it. This is just bouncing off a smart money trap of break and retest traders. This is the original block that broke this, flipped this point here, and also flipped this SMT on the left. Here. This one here. Yo, that's too much, James, man. Let me stay on topic. The topic is psychology. It's only two things, bro. It's just fear and